Polymarket is adding Chainalysis surveillance after insider-informed betting concerns hit prediction markets. The platform has to prove transparent event betting can scale without rewarding traders who act on non-public information. Insider trading backlash is the hook because the confirmed event creates a specific pressure point. The new on-chain integrity system is designed to surface trade patterns that may indicate insider knowledge or anomalous wallet behavior. The measurable anchor is $25.7 March, and the story turns on market integrity rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this: prediction market activity has grown quickly, with March trading volume estimated near $25.7 billion in the supply data. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, Polymarket and prediction markets sit inside a process where insider risk can change the readout. The baseline also defines the boundary. $25.7 March is usable evidence, while anything beyond insider risk still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where insider trading backlash becomes useful. On-chain analytics can cluster wallets, flag timing patterns, and route suspicious activity to internal reviewers before trust damage spreads. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is on-chain flags, which is why 25.7 March is a signal rather than decoration. That is why the segment spends time on on-chain flags before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. Users, market makers, and regulators are affected because confidence in settlement rules depends on fair access to information. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to prediction markets and Polymarket, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. Surveillance cannot prove every motive behind a trade, so the open question is how alerts translate into enforcement. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is whether flagged markets lead to visible rule actions and whether regulators accept stronger platform controls. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need Polymarket or relevant market participants to show follow-through around insider risk, not only reaction around prediction markets. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for insider trading backlash is concrete. The next signal is whether flagged markets lead to visible rule actions and whether regulators accept stronger platform controls. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect $25.7 March to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to $25.7 March, market integrity, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.